Hi, I'm Lisa Leiter. Here's your Chicago Business Today midday report. The red-hot downtown apartment market is starting to cool off a bit. Rents at high-end buildings slipped in the third quarter for the first time in nearly 2 years. The average rent at Class A apartment buildings was $2.40 a square foot, down from the second quarter, but still up 8% from a year ago, according to appraisal research counselors. The average occupancy rate at those same upscale buildings fell to 95.1%. That's also down slightly from the second quarter, but higher than a year ago. Some are blaming the drop on a seasonal slowdown, and appraisal research expects the market to stay strong for the next couple of years. A building boom beginning this year, though, could add more than 5,000 apartment units to the downtown market over the next few years, and that has dampened some of the enthusiasm on the part of apartment investors. Well, an upscale downtown residence for retirees filing for Chapter 11. The Clare at Water Tower filing for bankruptcy after recently defaulting on a $229 million loan. According to Bloomberg News, it was the largest municipal bond default of the year. The Clare wants court approval to borrow as much as $12 million from Redwood Capital Management while in bankruptcy, according to a filing. Crain recently wrote that 2/3 of the Clare's 248 units at 55 East Pearson remain unsold. The Franciscan Sisters of Chicago Service Corp was identified in court papers as the Clare's sole owner. Its largest unsecured creditor is Loyola University for $1.5 million in unpaid rent. Well, CME Group has lifted its hold on accounts transferred from MF Global. Customers can now trade, withdraw funds, or transfer their positions to other firms. Last week, CME put a hold on these accounts, saying it wanted to verify the collateral allocated to each customer involved in the transfer of positions. CME also said today it cannot release any additional funds to customers without permission from the trustee in the bankruptcy court. Regulators have been unable to find some $600 million in missing customer funds. And finally, higher prices are weighing on the customer satisfaction scores of Sara Lee and Quaker Oats. Sara Lee's scores dropped to the lowest in 5 years. The American Customer Satisfaction Index blamed higher prices for brands like Ballpark and Jimmy Dean that cost an average of 10% more than rivals. Kraft, though, had similarly big price hikes and had the second biggest gain this year in satisfaction ratings. Most food companies have raised prices to offset higher ingredient costs, but some are more likely than others to upset the public. Well, that's this edition of Chicago Business Today. Be sure to stick with chicagobusiness.com for all of your business headlines. Thanks for watching. We'll see you tomorrow.